Hi, I'm Deepashri. I'm here to share a few information on cost analysis and cost estimation. Cost analysis. Cost analysis aims to determine the optimal level of output that maximize profit while keeping cost under its control. It involves identifying, categorizing, and quantifying all the expenses related to the activity in question and assessing the impact on the overall budget and financial performance. The goal of the cost analysis is to provide insights into the cost structure of an organization and to support informed decision making regarding resource allocation and optimization. Cost analysis are being classified into four types: fixed cost, variable cost, direct cost, and indirect cost. Fixed costs are nothing but that the expense do not vary with changes in the level of production or sales volume. These costs remain constant regardless of how much a company products or sales such as rent, salaries, insurance, property, and depreciation. Fixed costs are often considered sunk cost because they must be paid regardless of whatever or not the company is generating revenue. In cost analysis understanding, fixed cost is important because they can have a significant impact on company's profitability and break-even point. Variable cost. Variable cost are the expenses that change in direct proportion to the level of production or sales. An example of a variable cost includes direct material, direct labor, sales commissions. These costs are typically analyzed separately from fixed costs, which remain constant regardless of level of production or sales. Direct cost. Direct costs are nothing but that the expense can be specifically traced to a particular product, project, or activity. These costs are directly related to the production of goods or services, and they include materials, labor, and any other costs that are directly associated with the production process. Indirect cost. Indirect costs are also known as overhead cost or expense that cannot be directly attributed to a specific product, project, or department. In cost analysis, indirect costs are important to consider as they can have a significant impact on overall profitability of a business or a project. Cost benefit analysis is the systematic process of evaluating the desirability of decision by weighing its potential benefit and cost. The steps for cost benefit analysis are: define the framework for the analysis, identify and classify cost and benefit, drawing the timeline for expected cost and revenue, calculate net present value, discount cost and benefits to obtain present value. Cost estimation. Cost estimation is to find the cost of manufacturing operation and to assist in setting the price for the product. Cost estimation methods are analog estimation, three-point estimating, parametric estimating, bottom-up estimating, and the last is expert judgment. Analogous estimation. This method involves using historical data from similar project to estimate the cost of a new project. Bottom-up estimating. This method involves estimating the cost of each individual component of a project and then adding them up to arrive at the total cost. Parametric estimating. This method involves using statistical data to estimate cost based on variables such as size and complexity. Three-point estimating. This method involves estimating cost based on three scenarios: the best scenario, the worst, and lastly the most likely scenario. Expert judgment. This method involves consulting with experts in the field of estimate the cost of a project based on the knowledge. Cost volume profit analysis. It's nothing but CVP. CVP analysis can be used to determine the break-even point, which is the point at which a company's total revenue equal its total cost, resulting in zero profit. By understanding the break-even point, a business can make informed decision about pricing, sales volume, and cost management to maximize the profits. The basic formula for cost volume profit analysis is profit is equal to sales into contribution margin minus fixed cost. Cost functions. Cost functions are mathematical functions that measure the difference between the predicted value and the actual values in machine learning on optimization problems. There are four types of cost function: mean squared error, mean absolute error, cross entropy, and the last is hinge loss. Here are a few common types of cost estimation. Mean square error measures the average square difference between the predicted and actual value. Mean absolute error measures the average absolute difference between the predicted and actual value. Cross entropy measures the difference between the predicted probability distribution and the actual probability distribution. Hinge loss, used for classification problems, measure the distance between the predicted and the actual boundaries. Limitation of cost estimation. It doesn't predict the political impacts, substitute for sound judgment, management, or control, make final decisions, produce results that are better than input data. Cost estimation cannot be applied with cookbook precision. The conclusion of cost analysis and cost estimation will depend upon the specific project activity uh, being analyzed. However, in general, the goal of cost analysis and cost estimation is to provide a realistic estimate of the resource required to complete the project or activity. This estimate can be used to form decision making and project planning. In conclusion, cost analysis and cost estimation are essential tools for effective project planning and management. By providing accurate and realistic estimates of project costs, these techniques can help organizations make informed decisions, allocate the resource effectively, and ensure project success.